Well, for more on foreign direct investment into China, let's bring in Arthur Dong, teaching professor at Georgetown University's McDonough School of Business. Always good to have you on.
Thank you, Rachelle. Always great to be on.
Now, Chinese officials say they expect modest foreign direct investment growth in the coming 5 years. What are your thoughts on the policymakers' assertions and the impact that could have on the economy?
Yes, certainly. Based on the pronouncements by policymakers in China, they're seeing a slowdown, relative to the earlier decades in which you had double-digit growth in foreign direct investment into China. Now, despite the fact that China and the United States is continuing to be embroiled in trade disputes, it's remarkable that China's FDI had grown from a base of 150 billion last year to now on track to achieving 160 billion. So despite the fact that we are still in the in the throes of a trade dispute, when you think about companies, particularly American companies and Western companies, they still have a robust interest in investing and entering the Chinese marketplace.
So let's look at their interest then. Which sectors or industries could expect to see the most growth in the coming years, especially when you think about the factors like this 5-year plan and existing projects and policies?
Yeah, based on my observation, I will say that several industries are set to continue a robust investment into China. This whole question of energy transition will be a big one, and those kinds of technologies that are related to energy transition will be very attractive in China and certainly welcome in China as China also tries to meet its environmental goals. Secondly, I see robust investment and momentum going into the financial services business. So with regard to the recent announcement by Goldman Sachs that China has authorized them to have 100% control of their joint venture in China, firms such as Goldman Sachs and many of Wall Street's major investment banks are going to be eyeing China with additional investments to build up their asset management arms and their wealth management arms in this very, very large potential market. In addition to that, I see the consumer industry, in other words, those companies both in the United States and abroad that are engaged in consumer products, continuing to have a very high interest in China and the rise of the Chinese middle class. And so for those reasons, I think those three particular industries are going to see a continued interest in making investments to both expand their existing operations as well as make new investments to bring in new products and services.
And what about the sectors that could be most at risk of losing investment?
Yeah, I think that the industries that are most at risk are certainly the ones that have been most recently grabbing headlines, such as the educational sector, such as companies that are engaged in e-commerce, such as Alibaba, and various types of online commerce. I think those types of investments will start to abate. In addition to that, I think anything related to very high technology, I think, is going to face some headwinds. The fact being that the United States has imposed very rigorous export controls on a wide variety of technologies amongst American companies. In other words, those technologies and those services cannot be sold into the Chinese marketplace. So this is going to cause some challenges in addition to the ongoing challenge of the microchip industry.
And as you mentioned, you have these tech challenges, supply chain challenges, and also then political tensions. Do you think China needs to resolve some of these existing tensions, say with Australia and the US and Europe, for the FDI to really grow and accelerate?
Yeah, FDI certainly is dependent on three things. It's dependent on existing companies in China, American or foreign companies that want to expand. The second would be companies that are not currently engaged in China but want to enter and open up operations in China. And the third is simply institutional or individual investors who want to buy shares in Chinese companies. What creates uncertainty and risk is the current geopolitical climate. And so when you have these kind of tensions that exist in the countries that you just mentioned, EU, the United States, Australia, greater portions of East Asia, as well as the ASEAN member nations, all of this increases risk and increases uncertainty, thereby having a direct impact on FDI.
Certainly lots to keep an eye on. Thank you, as always. Arthur Dong there, teaching professor at Georgetown University's McDonough School of Business.